Our next guest says investors should not expect that rally to last. We could get a retest of 70 coming mid-year. Of course, we're all just guessing here, but let's get to Gain Capital and CNBC contributor John Kilduff. John, so you do think we go higher, but then you think we kind of reset. Why?
Yeah, and it's informed guessing, David, I would point out. But I do believe we go higher here initially in the next several weeks just because of seasonally. There's a lot of angst that comes into this market just around the run up to the summer gasoline demand season here in the United States. Also, we have a rough patch here with the U.S. refining sector because of storms and other issues with the sector. So we're also focusing on that lack of turnaround and lack of production of refined products that's draining the supply and making things tight. But usually in the past, these fears recede rather quickly once we hit Memorial Day and prices actually drop throughout the summer for gasoline and everything else, and that's what I'm expecting.
And where's OPEC these days and OPEC Plus in terms of trying to sort of lower global inventories? Is it working at all?
It's having some effect, but it's also not getting them the success that they had hoped for at this point. They've been on this course of restrained production output for better part of a year plus now. I would expect them to roll out another extension of the current deal, the production cutback deal, probably through the end of the year. But again, the Saudis have cut as much as they can cut, and I think that are willing to cut. So they're really fighting the tide here of slack China demand, which keeps coming up with new headlines for us, almost as numerous as the troubles in the Middle East about their economic situation. For example, just recently, they had a big drop in foreign direct investment, which is a big measure for us to watch as to what's going on there. Another bad signal for a recovery there to occur. It keeps being pushed off, and that keeps pushing the demand growth that OPEC is counting on pushed off as well.
John, finally, I know we're talking oil here, but I'd love to just get your take on natural gas, given the new lows we've seen there and what your expectations are.
It's going to be hard for natural gas to muster much of a rally, given the weather outlook we're seeing for the balance of the winter here. It's just over. But I'll say this, David, I've been wanting to bring this up. As far as the LNG pause that the Biden administration has put on, it's an interesting thing because whether or not you like it is kind of who are you rooting for. Because if you're rooting for the industry, it's sort of a bad development. But as we're seeing here, if you're rooting for consumers and lower natural gas prices here in the U.S., you kind of like the fact that there could be less natural gas exports on the horizon than more, because this market is very, very sensitive to LNG exports, as we saw during the past year with the issues with Freeport and other things. So for now, natural gas is going to have a hard time getting back above the 250 level. It's going to stay somewhat moribund. But again, it's sort of an interesting trade, because if anything happens, weather or what have you, the upside is terrific.